I'm Peregoodoff from Apollo Corp. Apollo is a TSX-listed Explorco developing our Calico silver project.
Good to see you, Tom.
Good to see you,
welcome
sir.
to London, by the way.
Thank you.
Bright and sunny outside. Now you're here for a conference, so and also treading the streets, talking to investors as well. What's the conference for? What are you trying to get out of it?
Look, for us, it's a Mining Journal Select, and for us, this is our kind of one of our coming outs of the new resource update that we put out in March. So
right.
For me, it's about spreading the word.
Okay, right. So you put the resource out.
Yeah.
Timing, you kind of got whacked because it was the same time as some of the concern around collapse of banks in the US as well. Yeah. So perhaps it's slightly distracting. But so let's start with the resource, sure. And then we'll kind of talk about the macro.
Sure. So if you remember back to February, Matt, we talked about that maiden resource estimate, 165 million ounces. Look at Waterloo, we converted 95% of those inferred ounces into measured and indicated. So the resource now is 110 million ounces measured and indicated at 100 grams per ton. So we got a slight uptick in the overall grade. And of that 110, 90 million is measured at 103 grams per ton. So I think any doubt that the silver is there has now been very, very effectively removed.
Right, so you're going through the process of starting to demonstrate the scale of the opportunity. Correct. Here, but it's in the, let's talk about the macro now, because it's important as to, it gives us some clues as to perhaps how you need to play the market. So 2021 for second half and 2022, very difficult for junior miners. Precious metals not getting the love and attention that they're used to. Yeah. And because there's a disconnect between commodity prices and equities. It's a risk-off environment, right? Access to capital, cheap capital, also complicated. So for junior like you, you've kind of gone through the phase of trying to get as much of that indicated through into inferred. That's good. What else do you think you could have done, or do you think you kind of played it as well as you could have?
Look, Matt, I think you've heard me say this over and over. I will control the things I can control, and I will deliver on the things that I said I was going to deliver, and that's exactly what we've set out to do. I don't know that there's a lot more that we could have done in the current environment. I guess the other option for us would have been, like you see, some of the groups went turtle and went into capital preservation mode. Yep. That's kind of not my nature, and I think that the project that we've got at Calico is very robust, and we're going to continue to push forward with it, and move that thing closer to development, because I think right now is a perfect time for any contrarian investors out there.
Well, that's a good point, actually, because equities have been hit hard, especially precious metals. Not seeing the love that the price of silver and gold would suggest it should. Yeah. But you're at the expiration end of that equation, yeah. So maybe that's understandable, and for you and everyone else. Yeah. So you told us stay in control of what you can stay in control of, and advance the project forward rather than turtle down or hunker down on this thing. But, okay, so demonstrating a bit of scale is good news. Yeah. But let's talk about the macro. Silver price, it started to move in the last few weeks. Gold price has started to move in the last few weeks. Yeah. That is still risk-off environment. Yeah. So, and you talk about being a contrarian, which is great. So, are we at bottom? Are we near bottom? What do investors do? How do they play this?
Look, picking the bottom is notoriously difficult, but I will say that I think there's a lot more upside potential than there is continued downside risk in the precious metals markets. Right. So for me, it's about as close as you're going to get to the bottom. If we're not there, we're very, very close. I think that you're starting. We saw in the last couple of weeks that relationship between price of precious metals and volatility and risk start to come back a little bit, with gold touching over $2,000 an ounce. Everybody's predicting some additional volatility coming out of the banking sector, which should, if that relationship continues to hold, give increased impetus to both gold and silver prices. And silver, as you and I discussed, we have a foot in both camps. Precious metal, but we also have that underlying fundamental industrial demand.
Right. Okay. Yeah. Which I think a lot of silver companies are, talking about
Yeah.
because it's becoming more and more a reality. So
Sure.
it's in the EV context, solar context, etc.
Yeah.
And the traditional uses of it. But I want to kind of sort of nail you down a little bit on how junior explorers should behave and
Yeah.
how investors should behave. So, okay, we're going to say contrarian. We're going to say bottom or near
Yeah.
bottom, more upside than downside
Yeah.
in
Yeah.
these things. But for junior companies which are perhaps a little bit cash constrained,
Yeah.
you've either got to hunker down or you try and raise some capital. It's not going to be cheap, but you try
Mm.
and raise capital and advance the projects
Mm-hmm.
forward. So my job as an investor is saying, well, okay, of those guys, either hunkering down, advancing slowly, or because they raise cash at the right time, advancing quickly, which ones have the strongest fundamentals? As a contrarian investor, I still need to see the fundamentals work. Are you going to
Absolutely.
survive? Are your competitors going to survive? Why should I invest in your company?
Yeah, yeah. Well, look, I think go back to fundamentals. Measured and indicated resource, there isn't a more advanced resource category out there. The next step for us is proven and probable. So fundamentally, you're not going to see a larger silver resource in the U.S. On a pure silver basis, and it's one of the biggest ones in North America.
Wow.
So,
tell me more about that. That's interesting because there's a massive North American silver fanatical fan base.
Sure.
So you're saying that you've started, or you potentially will be the largest silver producer if you make it that far?
Resource, I said.
Resource. Ah, okay,
I said
okay.
resource. So undeveloped resources.
No, but what I want to assume is that at some point that converts into production, right?
Sure,
That's
sure. And then that's about right-sizing a development, taking into account OpEx and CapEx considerations. And, what that looks like, I couldn't really say just yet. We've got some additional work to do that we want to start this year on engineering studies, which are desktop. To come back to what you asked around what should juniors start to be doing right now. I think make sure those with fundamental stories, make sure that you do continue to get the story out there. You've got to remain relevant and on people's radars. So, people who are contemplating cutting back on some of these activities, be careful about that. I think the other thing that those groups with some cash and a fundamental story is, and you and I have talked about this as well, is now the time to start looking for new assets because, there are groups out there that weren't able to raise capital that now have a fundamentally sound story and they're hesitant to dilute that with very expensive equity. But at some point they've got to do something, and it is now the opportunity to try and secure those sorts of opportunities and increase our portfolio, and that's something that we're looking at.
Talking about this made in the USA thing.
Mm-hmm.
Because jurisdictional risk, we've talked about it in the past as well. We're seeing a lot of stories coming out of South America, out of Mexico, and other silver producing districts, where yes, you may have First Nations issues, where you have provincial, state, or federal issues too. It's making people again. Have cause for concern, shall we say? Is this made in the USA component advantageous to you? Is the US pro mining?
Is the U.S. pro mining? The U.S. is pro onshoring. Okay, they've started to really understand the risks that they run with over globalization. So they're starting to bring a lot of things back onshore. They are obviously starting to have a hard focus on mining, more so I think than they have in the past. Just the fact that, let's say even 5 years ago, 10 years ago, you didn't hear the mining industry being spoken about outside generally of the industry or the institutions that supported it. It's now in the vernacular of the guy on the street. And I think that's indicative of the fact that the U.S. as a whole is starting to understand they do need to get control of those inputs that they believe is going to be important to their future stratrities.
Right, and obviously
silver is one of them.
Silver is one of them. Silver, people are talking about it's not just silver. It's a green metal. Big part of that conversation, which I guess helps with the narrative, whether it be political or otherwise. state or federal level.
Yeah.
So in terms of where you go next,
Yeah.
right? It's still continuing. 2022 is still continuing into 2023 as a kind of difficult, place to play.
Yeah.
You have moved things forward. 2023 looks like what for you? Is it a case of watching game, waiting game? How do you play it?
No, look at we definitely are. We've cut some activities out of the portfolio. But I will say that we still want to get our geotech work underway. We want to get additional metallurgical programs underway. And a lot of that is relatively low cost, but it is important de-risking.
Yeah.
So, we are going to continue to focus on advancing this year. But at a pace perhaps that has been adjusted to reflect the markets.
Yeah.
The other thing, as I said, we're doing, we are kicking a lot of tires, and we are looking to put some additional opportunities in the portfolio, again with a focus on, jurisdictional risk is first and foremost in our minds.
Okay, I mean, obviously given your track record and given some people involved with this, I guess access to capital is perhaps a little bit easier than for some, and prices for some of the peers out there, some of the assets out there are going to be, better value, shall we say.
Sure.
So how serious are you about that? Do you think that this is an environment to do that? Because I know you're advising, say, okay, investors, if you're contrarian, at or near bottom, it's the right time for you guys. Does that make sense? Are you seeing a lot of M&A activity in your space?
Well, you're seeing a little bit of it. You saw Integra recently in their announcement, kind of a merger of equals and trying to get that critical mass and pull some costs out. I think that will continue to roll through. But everybody, looking at everybody says, well, my asset's undervalued, your asset's overvalued. Yeah. That's how every conversation
Every negotiation starts.
Every conversation starts.
Yeah, been there.
And, look at, but at some point people, they talk to their bankers and say, well, here's how much equity is going to cost you. And they pick the phone back up and say, okay, let's have a chat.
Right. Because, it's a great tactic to use. It's a great distraction. It gets people excited in the right moment. Time is everything, right? In the right moments, it's very exciting. Share price there's usually a reflection in the share price. Sometimes it's an act of desperation. Do you know what I mean? So it really that narrative needs to be controlled.
Absolutely.
So in terms of the types of assets that you think would be right for you guys,
yeah.
Sometimes merger of equals, I think, is a tricky one. Are you looking at asset level? Are you looking at companies? Or is it kind of all of the above?
We're looking at both. But what is more important to us, as I said, is going to be jurisdiction. And two, where in that pipeline are they? Look at, as we all know, if you look at the Lassonde curve, which I still believe characterizes the industry reasonably well.
Yeah.
You get into that second stage, you're through the exploration excitement, now you're into some of the harder yards. Yeah. That gets a little bit slow for a lot of investors.
Yeah.
So for us, we're going to be focusing earlier in the curve. I don't want to put two development stories together necessarily. Yeah. I want one that has got some exploration upside, but I don't want to go too early in the piece. I'm not going to go, down to the sort of very, very early stage pre-discovery.
Right.
It's a twinkle in a geologist's eye. I've done a lot of that in my career.
Yeah, and it's obviously low probability of success as well. So I understand that. And also in terms of the structure of that, that's going to be probably more share orientated, not necessarily entirely, but more share orientated than that's because you've got to manage the dilution component as well.
You do.
It's another thing which kind of scares people.
Yeah.
A lot. What are the other kind of long poles in the tent in terms of your project being defined as a success? You talk about de-risking, you talked about some of those things. What are the other de-risking components that need to happen?
Look at, obviously California remains an issue in the minds of a number of investors. So continuing to look for opportunities for us to de-risk that part of the
you talk about California, but it's San Bernardino County.
It's San Bernardino
right?
County, California. County, so you can't. There isn't a better place in California to have a project, and you know, I noticed the guys from 5 Elements are here, and you know they've got their pilot plant is up and running, and it's a substantial operation. Castle Mountain, Equinox's gold operation is still producing gold, and they're happy with that. And Mountain Pass is now completely through commissioning, and they're fully up and running. But you know, I can say it. I need to continue to to continue to work on that to get people to understand that yes, you can build mines in California. Before I leave this, there was a really interesting infographic that Kathy Fitzgerald, my VP, sent recently, which showed mining revenues generated by state by state, and I think California was number 2 in the U.S. Really? Who knew? Who knew? 2 or 3. It was definitely in the top 2 or 3. So, you know, again, the perception you can't do resource development in California, I think, is a bit of a gross generalization.
So kind of this whole mainly USA thing is a case of do it the right way, you can get there. But if you try and take shortcuts or, you know, don't deal with some of the de-risking issues, it's going to be problematic.
It is going to be problematic. That's exactly right. And you know, you and I have talked about this too. It's a bit of a bugbear of mine, but this industry talks about ESG quite a bit. And it has gotten more serious for all of us in the last, let's call it 5 years. But the market also can punish those groups that move into those jurisdictions where high standards are required and demanded to move forward. So there's this, you know, I'm comfortable working in California. Yes, the standards are high, but they should be the same standards that are adopted everywhere.
Broadly, you guys need to be held accountable for your actions.
Absolutely.
And I think that's the right thing to do. It's the only way that mining's going to get a better run at it, you know, because there are detractors out there, obviously. But look, good to see you. I know you're going to have some important meetings over here, you know, and you know,
full agenda.
Talk the story for sure. So good luck with that.
Thank you.
We'll see you soon. Perhaps we can actually get into the weeds about, you know, doing business in California and you know, at a state level, county level, wherever you want to go.
I'd love to do that.
It's still a conversation.
Good.
Okay.
Okay. Next time.